Friday. What's up, dude? Hey, happy Friday, everybody. Just after 3 o'clock, wanted to have a final session into the close. It's just after 3 p.m., 3:13 on the nose. We just tapped 6,500 on SPX. So keeping an eye on some of our levels today. Expected move. Well, a slide on Wednesday, just below that expected move. Thursday was an efficiency day. Today, sliding a little bit lower. The day isn't done yet. We still haven't closed. Ended up closing out for a net profit on the day. Thanks to defense. Daily profit play, we had a nice little defense trade. Ended up taking about a $50 loss on my daily profit play today, but took a $250 winner on the defense. And so I'm keeping an eye on that for the remainder of the day. I'd still like to see if the market can catch just a little bit of a late bid to close out, back above 65.10, maybe even get above. I mean, honestly, I think it'd be difficult to get back above the expected move at 65.27, but let's see what happens for the remainder of the day. So keep an eye on a couple of levels. As long as we stay above 64.85, there's a full winner for our daily profit play. We're still in that trade. Let's just look at the numbers for the day. Started with a slight gap lower. I'm going to go to a 5-minute chart here for a little bit more real estate. Here we go. So here is my 5-minute candle. We opened with a gap lower, and this is my opening price. We have slid about 85 points on an expected move of what today? 61. 60.81 is my tasty trade this morning. We've slid 81, so a little bit further than expected. Is it possible that the market comes back up here towards 20 or 25 by the end of the day? Sure. Is it possible with the breaking news that I posted in Telegram? This is what I saw. U.S. is making preparations for potentially ground troops in Iran. I was literally on the road today listening to NPR, and they had already said this. So I didn't think that it would be out there as breaking news today when it's like being talked about in the press. How's the market not pricing this stuff in? So anyway, it is what it is. Markets aren't taking it well. We're down near lows of the day. We're down near lows of the week. So from here, we figure out what to do. Hang on a second. I don't want you to have that, buddy. Give me that. Thank you. Thank you. Boop. All right, we're back. So how's everybody doing out there? Watching some trades, playing some games, defense around the 6,500, 64.95. If it comes down to 64.90, I still have a $1,500 profit trap hanging out right there, so it could get pretty interesting. Yeah, I mean, it happened on Wednesday, but it was barely inefficient on Wednesday. It was down by about 12 points. So unless you were right there at the expected move box, this one's a little bit more pronounced. So I have some thoughts. Coming into the weekend, part of me was like, I wonder if I could take a trade over the weekend. I'm going to avoid that. I'm going to not take a trade over the weekend because we could easily come into a Sunday futures market that is gapping lower. Okay. What do you got there, Raj? I'm still in the $10 defense trade, close one contract, 50 cents today. Okay, good. So you got so basically you have some free defense running. I mean, there's risk in the trade. I certainly don't want to see the market, do too much damage below 6,500. Here is my real-time gamma. So we're pretty sticky around that 6,500 handle. Could we drop to 90? I mean, that's a $1,500 profit trap if it gets to 90. So I don't mind having the defense there, but I'd honestly like to see it just kind of hang out around 6,500, maybe even get back to like 65.10. I'd still get a little bit of defense that I can manage into the close. Okay. So we will see if this is kind of putting an end to the close. I mean, it is a triple witching. It is a major expiration cycle. Could it get worse? Yes, right. All this stuff could happen. Obviously I don't control price and I'm just trading it based on probabilities. We did a pretty low delta trade. So my 64.85, I believe, was like a 7 delta. So it should be safe. But anything can happen. VIX, by the way, is up to what? VIX is up to 28 right now. Let me pull up that workspace for VIX. Okay, let me close down some of these browsers here. Any other breaking news? Energy strategy is built for this moment. Okay. Jesus, talk about just spin it however you want. Yeah, there's a lot of, need to know type stuff going on with the White House. US dollar whipsawed, US indices weekend, WTI strengthened. Let's take a look at that. Let's go to currencystrength.com. So today, CAD is up, dollar's up, Swiss is up, Euro's up. What is weak? Japanese yen, Aussie, New Zealand, pound all week today. CAD leading the way. I haven't actually taken a look at the old CAD in a moment. Let's see what that puppy's doing. Let's go a little bit more profit. I'm trying to pack away some additional defense here. All right, we'll see. So if I can grab a winner on daily profit play, maybe grab a little butterfly trap on the defense still for one contract that remains. 65.10 would be great. 6,500 is fine. I just don't want to see a breach of like 64.85. If I could have my wish, I'd like to see price stay above 64.90 is a pin price. 6,500 is fine, but I don't want to see it dump into like 64.90 or 85. It's my break even. I'm trying to think of my break even is. So that defense trade is 75. I mean, I technically have defense all the way down to 64.75, but that defense is going to be, very volatile and slippery, literally into the close. And for me to get all of that profit, all that defense, is going to have to be like perfectly pinned at 64.90 in the final minutes or even the close of the day, which is extremely difficult to do. So I'm just going to continue to watch some of the contracts I have running right now. Let's see here. 18-year high in gilts. Okay. Let me get some comments here. Still holding. Okay, cool. Yep. Gotcha. What's worse is today is Friday. Yeah, and that's what I'm saying. Is that, I mean, coming into Monday, I think that, Friday inefficient day would probably translate into an efficient Monday. We continue to see the classic game of market makers, which is the implied volatility is greater than the actual or greater than the realized. Monday is that type of day. But if we have a gap on Sunday to Monday, that's why I want to wait until opening bell on Monday versus putting a trade in over the weekend. We have seen already, even during the week, some pretty healthy gaps, right? We saw, 0.3% today. We've had a 0.6%, 0.7% gap. We had over a 1% gap. We had a 0.4 to 5% gap. I mean, we've had a lot of gap opens and closes, like been higher, lower gaps for the last several weeks. So yeah, I don't want to force a trade over the weekend, despite the volatility at 28, right? The VIX is at 28. It seems like a good idea to sell premium. But I wouldn't be putting on a trade to say like, let's make this trade count for Monday. Because if we have a big gap lower, Monday's levels are blown out, right? So I'd rather treat Monday like it's just a clean day and, let the market just have a fresh day on Monday. And hopefully we will go to, that kind of this logic is the expected move should be maintained because we are inefficient today. So that means that market makers are rolling that risk, right? They're hedging here. If they've got, sell puts, they're rolling that risk. And most likely they're going to have to kind of buffer that expected move or imply volatility and try to contain things on Monday. So we'll see what that looks like. So we seem to be hanging out right around that 6,500 handle for the day. That puts us down about 1.5%. NASDAQ's down almost 2%. Dow is down about 1.28. Russell down 2.5%. VIX is up, 17% on the day, back up to 28. I pulled this up here. We just broke intraday highs on VIX at 27.5. I've got a 29. Let me try to chart along at 29 here just to see if we're gonna. I mean, if the VIX is going to continue to go higher into the close, that's not a good sign for how this market's going to end the day, right? Do we end on like a crescendo of volatility? I mean, maybe, but it seems that price is at least somewhat contained. Here's a 5-minute time frame. So we're somewhat contained around this 6,500 handle. Maybe it's enough to stop the bleeding for the day. We'll see where the rest of the day goes. Okay. Let's see what else. Get some other comments here. Yep. Yeah, we'll watch the defense trades. I said that in Telegram for engineered options. We are not strangers, right? We're no strangers to having defense trades bail us out for next week, and that's precisely what could happen on Monday. If the market catches a short-term bid, we're at those, October 10th, November 20th. We're just below the 200-day moving average as the market just catches single-day pump. It's all we need on Monday. If we just close out a defense trade for profit, we'll still make some money on the week. We'll have like a break even or better, right? So it's not fun. I mean, it's not fun. VT. Oh, I just got filled on a pullback. That's some dollar cost averaging that I have going on here. Oh shit, here we go. 64.95. All right. So we are getting some unpleasant acceleration. 64.94 into the close. Where is the market going? So we are down now about 1.7% from the gap. We are down intraday, probably close to 100 points now, 94 points on the day. Okay, now my question is, how ugly does this get? How ugly does this get? VIX is, like I said, if VIX is going to keep rallying through this close, the bottom is not going to be pleasant. So I just want to see if we can kind of, this is going to be a long 35 minutes, folks. It's going to feel long if you got trades in right now, especially if you're kind of, sell puts, spreads, hoping for a bottom to hold. I want to see a price and stay above 64.85. I want to see a price and stay above 6,500, but I got a profit trap at 90. Profit trap at 90 is fine. Break even on that is 64.75, but this is nothing I can control. So if this market continues to bleed lower, let's put a 2% target out there just for fun. If the market drops 2%, we're at 64.75, which is my break even, not necessarily making me money. So anyway, we'll see what the rest of the day looks like. We got 34 minutes and we'll hang out and do it together. Okay. Yep. Small flush there. Free greed index down to 14. So are we at extreme greed or extreme fear right now? We've got to be extreme fear at this point, right? All right, let's see. So let's go CNN, fear and greed index. Oh yeah. Again, it's just one of many indicators, but yeah. When was this? Wasn't this in like a 6 at some point in 2025? I don't remember when that was, but we did have, let's go to AAII sentiment this week. Just a couple of metrics. Again, this is not a time. Look at this thing. Bears at 52%, extreme fear. I know that this doesn't serve as a timing mechanism, but it's still hard for me to justify like I'm going to get super bearish on the market right now. I'm going to stay out of the way. I'm going to try to be somewhat cautious. I'm going to trim my risk and deleverage a little bit, but this is crazy, right? We're up to, here's bearish highs. This would have been Liberation Day. We got up to 61.9. We're at 52. This is the highest bearish reading we've had in months. So anyway, but where's the market at? Market is still in a correction. We'll see where we're at. Take a look at the big picture for a moment. Let me go down to the, here's the daily chart. Look at this. This is ugly, man. This is ugly. Crazy story. I wonder if Jason is with us this afternoon. We had a trader in one of my services, double ups, that took a butterfly spread, close out for over, I think, 1,200% gain today. The crazy part is that was a 50 wide. That trade would be right now near the close. Our pin price on that was 6,500. I'm hoping Jason's not kicking himself, but obviously we didn't know the market's going to fall down to 6,500 today. But that trade would be showing close to like $4,900. $4,900. Basically, it's a $100 risk. So that's a 4,900% winner. kind of crazy. But anyway, what do we have? Gold. Yep. And look, gold's going to hit that 200-day moving average. I told you that months ago. I didn't know what the catalyst would be. Doesn't really matter because right now it clearly shows that nothing's really safe. You know, you look at every asset today. What do we have for sector performance? Let's see if I can find my State Street. See if it just shows it here. Just want to get an at a glance. So this is today. I don't know if this is yesterday's close. I would imagine this is today. We can go to the heat map today. You're going to see a lot of red. Yeah. So, I mean, we've got 77% of the stock market down today. I mean, it's not everything. You've got energy up, AT&T up. I think, did they have earnings today? I'm guessing that's why they may be up. But Mag 7, you know, dragging everything lower. So it is getting ugly. But like I said, I'm just saying we need to keep at least some wits about us because this is an extreme contrarian sentiment reading. So is this. I'm not saying that this is the time I want to pick the bottom. I'm not saying that because that's the scariest thing in a situation like this. Okay. But somebody just mentioned it. Yeah, good time for a taco trade. It could be, you know, and do I think that Trump is probably going to be the most vocal about this? Probably. I mean, if anywhere that Trump would be vocal, now would make some sense. You know, I mean, we're down, I think we're down 7+% now from the all-time highs. We could get back to maybe this 12% correction area back here. It could get uglier before it gets better. I'm telling you, like, I'm not calling the bottom here, but we're below the 200-day moving average. The 50 period, this is the one thing that would be, you know, the death cross is, okay, this darker blue line is my 50 period, right? I'm just tracing this with my circle. So this 50 period having to cross over the 200, we would be potentially so much lower when that actually triggers that I'd be more interested in maybe this thing bouncing back up above and that, you know, being a lagging cross. But right now things are not great, right? We paused for a moment at the 200-day. We're selling off. I'm a little surprised that we are, you know, still pushing down below these lows. We talked about them this morning. That's why I had these levels noted. So the what was it here? The 65.20 was the NVIDIA sell-off candle low. That was the day after NVIDIA sold off, and the round number at 6,500. So I'm like, between 65.50, 65.20, I would think the market can hold some support. And then, you know, obviously we have the news today. It's like U.S. is maybe going to throw some ground troops out there. Market didn't like it. It was enough of a push lower. It just kind of broke that structure, and we're just, you know, limping into the close here. So 29 minutes left. And it's, like I said, it'll be a long 29 minutes. Long Dell, okay. Yeah, I don't know, man. I mean, I'm not. I mean, I think it's insane to think that we have a president that thinks he can, you know, stop this market or protect this market or you know, talk this market back up. One thing that ultimately holds true is what markets ultimately care about is valuation, earnings, interest rates. And right now, what is changing currently in the landscape is there is a worry of earnings compression. There is guidance that is not optimistic. And interest rates, from what I saw today, that traders, and I don't know if this is going to be the watch tool here, but let's go to CME Fed watch tool. I want to see if this changed from this week on Wednesday when we had the FOMC. Did it actually change to show that there's a rate hike probability? Because right now, I'm still not seeing a rate hike probability, not even close. So when it says traders are pricing in, it's like, does that mean it's poly market? Are we talking prediction markets talking about a rate hike? Because I'm not seeing it. I'm not seeing anything in the futures market that is showing the markets are anticipating a rate hike from the Fed. What they're showing is literally nothing until, I mean, maybe a cut in late 2027. Even I think it was it who's Waller? Is it Kevin Waller? There's several Kevins in the mix. But anyway, Fed chair, or not Fed chair, Fed Governor Waller had said he was prepared to cut rates if we didn't have a spike in inflation. Well, with what happened with oil, that spike in inflation is probably changing the tune right now. to at least maintain this pause for longer. Or, I mean, it's going to look silly if they have to hike rates. I mean, Powell was already very cautious on cutting rates. I think that their criticism on the policies, they waited too long, they cut too slowly, but here they are, maybe even thinking about raising. So I don't know how it all plays out. What else? I was on the wrong screen, by the way. Here, I was trying to show this. There's no probability of a cut from what I can see. Okay. So I don't see how this is being priced in unless this is a poly market thing, and maybe it is. All right, we're at 90. Where's my gamma? Oh, crikey. 65. What was that trade there? That can't be right. End of the month, 65. Well, shit, we're trading right at it right now. So I've got a broken wing in there. That's just a a la carte trade. 87. Oh boy, dude, like, don't blow me out to the downside today. Come on, man, give me a little defense here in 20 minutes, would you? Yeah, buddy. So I've got defense up. My threat level is 64.85. My break even is 64.87. My defense break even is 64.75. Come on, let's get sticky back to 6,500 if we can. I don't know, man. I don't have a lot of faith this market's gonna give me a bid at the end of the day. So anything can happen. Let me get maybe really creative here for a moment. Not that I'm enjoying this right now. If I'm not going to get my defense trade to work for me, I'm just going to take some small risk, which will be annoying. All right. Little defense around 75. Okay. Just trying to think right now. The call side is like, if you sell bear calls at 65, I'm just looking at my broker platform here, 65, 65, 05. X, like offering nothing. Let's see. All right. It's going to hang tight. I was looking at some bear call spreads around 6,500. If this market's just going to tank for the next 24 minutes, I would hope that it wouldn't, but it's not feeling good. Got a small debit dollar cost averaging in on Tesla. We're through all the gamma. We're well through the 100% ATR. We might even be spacing out to close to 150% on the day. Let's take a look at my VIX at 29. Jeez, hang on a second. That's pretty loud. All right, folks. Well, end of the month is getting filled up. We got some defense. This market is not liking it. We're gonna have to see how ugly this gets on Monday with maybe a Sunday gap, but today is not looking nor feeling good. Yep, good defense trade there for sure. I've still got defense running a little bit, but 85 is my daily profit play. I still had one contract gunning that's down. Defense. It's at my break even. Yuck. What's up, buddy? Okay. Everyone, you're watching the screen here, right? We're just free falling in here the last 10 minutes, 15 minutes. This is a bit messy to go into the close. Yep. So, I mean, I don't know. I'm not planning on a bid. This could be a really ugly close. I might get lucky here with a catch at like 80, 85 on just a bounce. If there's some, just extreme triggers for the next 20 minutes. But like I said, my confidence level, this market bouncing back up 20, 30 points is pretty slim. So we'll see where the day settles. I mean, 75 is a break even. I'd still be up about 300, 400 bucks on the profit trap on that defense. If we can somehow muster a run to like 85 or 90, that would be pretty ideal. But otherwise, we'll wait and see. Okay, go walk, dude. And then when this is all said and done, I'm going to go outside and touch some grass because this is not what I want to stare at for the rest of the day. I wonder what a crash looks like. Will Monday be? I don't know. That's possible. Sean saying it would be a margin call Monday. I mean, it could. It could be a big flush. We could have. I mean, think of Liberation Day 2025. We had like what 4, 5, 6% gaps lower when that happened. You go back to the big picture. I mean, this stuff was horrendous last year. When Liberation Day was happening, look at this thing. Gap lower, gap lower. This got really nasty. We had a gap from, that's a 1.5% gap lower. That's pretty large. And not just the gap lower, but it also pushed lower all day. So market from, close of this, actually that close was even worse. I forgot. So this is a daily chart. Close up here, open 3% lower, plus the intraday move. That was almost a 5% swing. That was right after Liberation Day. So there's a 5% swing. Then you have the close, another, 1.8% gap lower, plus the flush that day. That's a 6% move. So, I mean, that was intense. That felt a lot like, when it was all said and done, it felt a lot like COVID. It was just silly that it was kind of self-induced, and then the market obviously bounced back ridiculously hard. But right now, it's just picking up a little bit into this move. It's like it's been slow and steady. The bears have clearly had the upper hand outside of this one-day pop. It's been all bears, all dominated. A little bit of noise, but today I'd say between Wednesday of this week, market gave back everything, and once we broke fresh lows, it's like, I mean, it's pretty clean structure. It really is. But when you trade every day and you're like, well, market's been efficient, and it has been. I mean, 50 plus days out of like maybe 54. Now it'd be like 50 days out of 55 because today's inefficient as well. But we are not done. So 20 minutes to go. Let's see if the markets can just hang in there for a stall at the close. We'll see. But Liberation Day was way worse. So yeah, you're right. I mean, a gap coming into Sunday, Monday could look and feel way worse. I mean, I think what is making this potentially scary is look at the vulnerability. If this market isn't going to bounce like literally now, between this low, and now, it's like if we're not bouncing immediately next week and we're not going to get daily price action and get back above the 200-day moving average, if we are going to close here and push lower, this is where I think the fast, ugly nastiness can happen, right? So like 6,500 down to about 6,150 could be very fast. That's all I'm saying. Like, it could get really ugly, and I would say buckle up, right? If we have a big move on, it doesn't have to be Monday, obviously, but like a big move next week where the market fights back, if we get a close back above the 200-day moving average, then I think this is just more noise, and possibly this broadening pattern still survives. But as long as we're seeing price below this 200-day moving average, this market's not going to love it. But this is the most vulnerable right now. All of this run, all of this chop, now rounding, now pressuring to the downside, it gets really gross. It accelerates a lot there. I'm saying if it does. So this is probably the most vulnerable spot that I see the market at. And I said this earlier, if we don't bounce off these lows, dropping to 6,150 is not a surprise, and even a round number at 6,000 wouldn't be a surprise. And that's going to catch a lot of traders off guard, or just be this like bigger story of deleveraging. Markets are concerned, and then we're going to see what jawboning and actions and maybe a resolution. But let's see what's happening. Let's take a look at some other stuff while we're here for the next 17 minutes. Oil prices back up. Did they cross 100? No, they're at 98. So we'll see. Gold. I said the 200-day moving average. It's down to some fresh intraday lows. Here's the daily chart. Look at that thing, man. Oof. Gold is, I honestly, part of me thinks that people are taking gold profits to just cover their butts and, deleverage elsewhere. But I still like buying gold. It's just, I'm not trying to catch this falling knife. I think we at least fall back to, at this stage, we probably fall into the, 4,400 zone. We probably fall to 42. Looking left in this bigger picture, I said this before. I said that we talked for maybe 25 minutes on gold yesterday. I mean, take this low at $1,600 an ounce and take this ridiculous high at $5,600 an ounce, draw a big fat Fibonacci swing. And even if price just comes back to find, and this isn't a perfect science here, but even if we just find pullbacks, right? 4,100 gold, 3,600 gold, 31, 3,200 gold. I mean, those are big levels that the market might actually care about. So if you're looking for timing, I mean, those are some decent levels to get into. I just think you've got to be, a little bit bigger picture oriented on gold. But it's technically playing out like I thought. It's funny, I don't know when I posted this. I think in January, February, I probably drew this line with our bar count. I anticipated that out by the end of March, we'd be at like 625, 630 bars. And so I put this on my chart probably 2 months ago. End of March, gold showing signs of correction to the 200-day moving average. And it did. I put this on before this top even happened. And then we had our little Gartley pattern and then it sold off. I mean, it just worked out pretty well. So I'm just kind of waiting to buy some dips and position for it. Okay, silver. Same thing, following suit, just a big unwind. And everyone thought gold and silver is going to be the greatest trade. It's like, it's not. This is how the market feels when it's like there's nowhere to hide, right? The only thing that's up, let's look at sectors right now. There's only really one thing that's up. Energy has been up, topping out a little bit here, but take a look at all these sectors. Down on communication services, down on discretionary, down on staples. Look at this thing. This was like, oh, the most beat up sector. What a great performance on staples. It was up like 18% for the year, 18% on the swing. Look at that, it's giving it all back. Look at energy. Energy's still ripping, but it's probably due for a pullback. XOP, another play. It's not a sector, but a play on energy. Here's financials. Credit concerns, liquidity crunch. Financials are getting hit pretty hard. Healthcare getting hit pretty hard. Industrials getting hit pretty hard. Basic materials getting hit pretty hard. Like all these things that were cranking early in 2026, they're all reverting. This feels like 2022. The market started off hot for 3-4 months in energy, in the space I just mentioned, energy, materials, the inflationary play, and all this is deleveraging. So if this is going to continue, and I talked about this earlier, that's a nice little pop there. Okay, a little salvage there, 75 up to 95. All right, let's see. Let's keep an eye on this one. What I was mentioning this morning, let's go back to SPX here. If this is somewhat of a 2022 vibe, then we might have something along these lines. High to low, lower high to lower low, lower high to lower low, lower high to lower low. It might feel something like that. I don't know if that's going to happen, right? The market rarely repeats. It just rhymes. But if we're going to have this like elevated 20 to 30 VIX, 20 to 30 VIX, 20 to 30 VIX, we might see the market doing this until this correction is done. And it might be a 15, 20% correction. Is that enough to hold the market and sustain this? And this is where I said this is probably the most uncomfortable spot the market could be in, because at this point, are we going to bounce and salvage what is still a bull market, right? Because this would be major support, or are we going to give this back, deteriorate a lot of confidence, only to see this market come up, take out April 2025 lows? And now we're talking, to me, this is like, buying the dip for a short-term pop, but being very, very cautious, because this rolls over. It's going to be hard to have anything maybe get back to 6,000 without fading. That to me would be like this monster potential topping pattern. And oh my gosh, we are in for some wild times, folks, if that's what happens. So, as we've been saying all year, buckle up. Okay, So here we are on the 5-minute chart, pinned at 90 for a trap. It's looking a little bit better. I got my trap up about $600, $575. We're above 85, which is my daily profit play. So that seems manageable. All right. I don't want to see the market come back and retest the lows. It'd be nice to see this thing just stay right around this like 90, 95 zone. If it clears 6,500, that's fine, but it's going to be a long 11 minutes. All right. What do we have here? Love to buy again to the highs. I mean, obviously everyone wants to see it go to the highs. Yep. We just have some ugly volatility right now. Markets are just, yeah, they're dumping hard. They really are. This is and again, we looked at Liberation Day. Like, this isn't awful. Like, this is bad. This is inefficient. But you've seen the writing on the wall now for at least the last week or two. It hasn't been easy to spot the bear side of this market. But I warned, once we broke below 6,800 with some closes, I'm like, this should be some follow through. And it's obviously not easy on a day-to-day basis to get follow through, but the market is doing that. So coming in this operation or this OPEX cycle, it is. I mean, we're at these measured moves. So now the question is, do we have more follow through? All right, let me set a little chart alarm here. So can we get back to like 95-ish to close out the day? All right. It's gonna be an interesting close. So 1, 2, 3. All right, just got a quick butterfly in, then I'm gonna label really quickly. Okay, got some other strikes in here I'll pay attention to. So EOD butterfly. This is up a quick $100. Coming in the final 9 minutes, I've got a trap at 75. Break even, so 75 is a good pin. That's up $100. I'm gonna take this off right now. Just grab a quick 100. See if I can get out of here for 10 cents credit. Okay, looking better. 5 cents credit. Okay, it's worth $100. The profit trap's $500. That pin price is 64.75, which is right around the lows from today at 64.73. All right, this little late push here is encouraging. Somebody's asking about crash insurance. What do we have here? Is it okay? Maybe a shorter time. I mean, yeah, we can obviously, but putting crash insurance on now at VIX at 29 is not the plan. Crash insurance is fine. I'm gonna let that run. It's in profit. I mean, our crash insurance is up. Yeah, I mean, it's not a ton. The VIX. I mean, the VIX has been profitable, but let me check my ES position. We hedged on SPX. We hedged on VIX. I mean, I'm up a couple $100. I'm up like $300 on hedges right now. It's not awesome. My VIX, synthetic VIX, is up. I'm up. Is that right? I'm up $475 on synthetic VIX. Let me see here. Up 344. Gosh, so I've got to keep that thing open. It's an April 15th synthetic VIX. I've got to keep it open because if we bump like the 40, 50 handle on the VIX, that's why it's there. I want to see if we get a bigger bump into that. All right, right now we've got defense looking better. Now my double up trade, or I'm sorry, my daily profit play is still up in profit. Looking good to get that thing above $100. Okay, good. Can we get above like, I mean, I've got a pin price at 65.10 as well. It's going to be a wild and crazy close, man. And, you know, this is why you don't sleep on triple witching, I guess, right? All the other stuff going on, market is moving. Again, we're kind of talking about this. It's going to be a long 6 minutes. Let's see here. Mike, is that you? Took the courage, sold the put ratio, Dow 300, 280. Nice. Nice. Yeah, I got a lot of those trades. Project Options Edge, we've been selling some premium on Dow, SPY, Qs, Russell. A lot of those trades are September, October, December, January. Yep. We've got some of those trades running for sure. All right. Now we're getting a scream to the upside. Crazy stuff, man. All right. I'm going to check on one defense trade here really quickly. Wow, that was up $600, and now it's down to it's up $350, but it was up 600 a second ago. I'm just going to keep an eye on the rest of the day. Got a profit trap around the 65.10. Keep an eye on this one as well. Wow. Okay, so let's see if I can mitigate some of this. Okay, daily profit looking pretty good. That 120 is now up to, I'm going to try to close that thing down for all but 5 cents. Can I get it out for 5 cents? 5 cents debit. Yep, I'm just going to have to ride this thing to the close if I want. I can close it out for 10 probably. Come on, baby. Let's push up to like 10 or 15. Okay. Let's go. I'm just trying to mitigate debits. Prices are moving fast. 65.06, recent high at 08. All right, daily profit looking good. Final 4 minutes. Can we just give this thing a little thrust to the upside? Maybe taking a partial loss on a broken wing. My defense trade still looking okay. God, man, $600 down to 150. Super fast. All right, let's get a push up into 10 plus. Come on, 3 minutes to go. Give me some love above 10. You get me above 10, that'll be a profit trap on one. Couple more winners. Come on. Step up, Bulls. Don't be shy. Don't be shy. Okay, just spot checking. I'm just watching broker on one screen, price on the other. All right. Pins at 60. So 65.10 is a pin. 64.90 is a pin. Let's see. That is, gosh, that 64.90. That thing was up $650. Now it's up 63. Unbelievable. I mean, the reason I didn't close it is I thought we needed the defense around that like 80 to 85 zone. That was a nice little pop here from, you know, I mean, that was a 30, 40 point swing. So I've got a little quick butterfly for a winner. Daily prop play is looking good for a full winner. That defense trade, I mean, I guess at this point, I could just, can I get anything for that defense? It's up 30, 40 bucks. It's better than a small loss, I guess. See if I can just close it out. Okay, give me 40 bucks on that thing. No. There we go. Okay, got filled for $1.40, so a little profit trap there. Double up still looking good, or daily profit play still looking good. Come on, 1 minute. Push us up to 10. Come on, Bulls. 1 minute, one thrust, get up to 10. Make it quick. 07 and change. Okay, I'm showing a settlement at 65.0669. Do some numbers on the day. So defense, $140 winner on defense. I had 650 bucks. Let that slip to 140. It's still okay. Still grabbed 120 bucks on daily profit play. Took another $100 winner on a broken wing butterfly. Oops. So 140 plus 120 plus 100. Not bad. Yeah, not bad. So could have been way freaking worse. I'm not gonna lie. When that thing was down to 80, 85, I'm like, son of a gun. I just stacked up those defense trades and they all freaking failed. But they didn't. Miraculous little surge here at the end. That's a big swing. That's a quick 30 points in, 15, 20 minutes. So could have been a lot worse. But double up full profit. Or I'm sorry, double up was actually pretty good. Gosh, that crazy. Who was with me this morning for daily profit play? I'm gonna have to hit up Jason on Monday. God, his trade was literally. I can tell you exactly what his trade would have been worth if he just did one contract. Okay, it was $1.20. So we had a $50 wide. So $50 wide minus the $1.20. The max profit was $48.80. And that perfect profit trade was at the 6,500 pin price. So you don't get $8.32 worth, but you take off $8.32, you're still up $4,000 on a $110, $120 risk. So divide that by 120 bucks. That is a 3,300% winner. Crazy. But that's what's fun about butterfly spreads is you take a ton of profit, you made over 1,200%, and you're looking back and like, oh, I could have. I know, but did I expect this to happen today? No, but it did. So all in all, we still won the day. And as ugly as this was, let's check and see. I think the market was inefficient. Let's check my expected move box here. Yep. So we gave it a heck of a run. 65.0664. My close on Tasty is 65.0663. So let's see here. Yeah, so up about 360 bucks in the day. Inefficient, but the nice thing about this is we can take this, kind of nugget of information and take this into Monday's trading. The VIX is, all the way up here to 29 and change, and then started to dump a little bit at the end. So that certainly helped. That was a big drop in VIX, which helped us get that little bid. So it still was an inefficient day. Expect Monday to be a wild ride, but I would think that the markets, if they rolled this risk from today to Monday, then we're going to hopefully see an efficient day on Monday where we have the expected move greater than the actual. Okay. So crazy stuff. Yeah, any green on an all red day is good for sure. For sure. 6506, 63 up. That's your think or swim. I'm showing 6506.60 right now. It's kind of fluctuating, but I think the settlement's going to be around 6506.60. So, yeah, I mean, carved out a couple bucks on the day. Again, is it that exciting? Like, no, because the context of what is happening right now with some of the trades, it's like it is crunch time for some of these trades going into the end of this month. I mean, right now March is not looking good at all. So, March might continue to be like a month that just bleeds out. Look at this thing. All those weeks and weeks and weeks of indecision, or I should say months of like just the market couldn't stop, couldn't go down. And, we're getting a really nice like retracement candle. I mean, March is down 4.6%, 4.7%. That's not a typical seasonality pattern, but I did say the weakness window is February, March, and April. So this isn't necessarily done, but if we end up going, decision, get a bounce, and then another flush lower, again, I'm not super interested in going hog wild on buying a dip at 6150, but I am interested in, if we get to this level, buying, and I should say not buying, but selling more premium. If we get to this level, selling more premium all the way down here towards this Liberation Day low and trying to generate some income safely. That is probably going to be the safest trade versus trying to get in here and just, grind with this market, having a bigger picture trade. And, now we're starting to see that, what is fueling this? I mean, oil's up today, gold's down, silver's down, geopolitical tensions high, fear and greed index at extreme fear, AAII sentiment way up here towards, almost yearly highs. This is Liberation Day before. This is up there. This is really, really skewed towards a very bearish sentiment. Okay. On top of that, one more thing to check would be, how bad is market breadth? Okay. I mean, this seems insane in this environment, but I have to also look and see, like, this could offer a ridiculous near-term buying opportunity if we see market breadth deteriorate back down to like these low teens, 13, 12, 11 on market breadth. I'm going to take a stab at the market, even if it's just defined risk bull call spreads or defined risk credit spreads, cash settled. It's a pretty good trade. It's worth taking a stab at it for 30 days. So there's plenty to talk about. Okay, plenty to talk about. Just filled an option trade on TLT after the close. I guess it's also an extended hours. Well, I mean, if it's settled like that, because it's a stock, Sean. TLT is like an ETF. It trades like the bond ETF. So you have until like 4:15 or 4:30. Trades can be filled. Trades can be managed. They settle like a stock. That's why I stick to SPX and XSP so frequently, because it's at 4 o'clock. That's when I know what the number is. And this is why also, like, I like futures, but for that same reason, when I trade option futures or futures options, it's the same thing as like there's settlement after 4 p.m. So that's why I like SPX. It's like, give me the settlement at 4 p.m. Let me know exactly what I did in that trade. Okay. All right. Let's do this. I'm bringing up the chat here. Oh boy, that looks awful. This is where I need dark mode, huh? I just threw the chat up on the screen just so everyone can see. Like, we got lots of comments here. Say hi. Happy Friday. Happy to win the day. My gosh, that felt pretty lucky, honestly. For the market to close that way at the end of the day, that felt pretty lucky. Wasn't by surprise, really. It's like I was kind of shocked the market did push as low as it did to 70, 74, 73. It was a nice late day surge. I just missed a little tiny profit trap at 10 though. So the net result is, I wish I would have played defense a little bit better. The defense around that 90 handle was up about $600 to $700. That would have been great. But if I close that out, I literally had zero defense going into that 85 handle. That's why I didn't close it. So net, the way it added up here was the defense trade paid me 140 bucks. Let me just type it instead of drawing it. I don't have my drawing tool. So net, we had a DPP defense was a 10-cent debit, and I closed. It was, so I'll put entry here. Entry, 10-cent debit, and then closed for $1.50 credit. We had DPP, which is my standard strategy, We were in for $1.20, $1.20 credit, and it closed at 0, so I keep the full profit there. And I put in a end of day butterfly. I didn't make that a trade alert. That was on me. That got filled literally at that bottom there. It was a pin price. It was 64.80 by 64.75, and then I went 10 wide. So that got filled for $1 entry dollar credit, and that closed at $0 as well. So that's how the story adds up for the day. It could have been better. It could have been way worse. So I am not unhappy by how this day settled. Let's see, 140 plus 120 plus 100. I'm happy with that on the day. And it could have been way worse. So we survive. Now it's time to enjoy the weekend. Go out, touch some grass. Market's not going to care what you do over the weekend. So just enjoy it, hang out with friends and family. And we'll be back and we'll grind in this on Monday. Just be prepared for maybe some wild stuff on Monday. Maybe there's a gap lower. Maybe there's another flush. Maybe there's a de-escalation this weekend. I have no idea. We can hope for the best as far as engineered options. We are at some defense levels. So having this thing close, this is lagging, but let me see my live feed on XSP. So XSP, my defense is at 652. So if we get priced back above 652 on Monday, we're basically gonna have a break-even week. Or actually we'll make a few bucks if it's above 652. If we get a decent catch on Monday and we can get priced back to around, I wanna say 656. Let me check my XSP here. So 652. Yeah, so if we have a big move to like 659, that's an awesome week. If I get a break even at 659 or a win at 659 plus my defense at 652, that would wash out. I'd wash out my participation trade and my break even. Those would be losses I could absorb. That would be a win of $200, $200, minus 50, and minus 100. I'd still be up $250 for the week, and the market is down, 2-3% for the week, down 4.5% for the month, and we're still making money. But we have to have a pretty strong Monday. And then, the month isn't over either. If there's any fight in this market, then it would be nice to see that the market's going to respond somewhere to these current levels. Today, for example, what did the market do? If the market cares that this low was tested, is this a spot where, Trump and company step in? Not the Fed, but probably the president being the most vocal about this. If they do, we could see Monday having a pretty interesting day to the upside, getting back to this 200-day moving average, right? Back above 6,600. If it gets worse, I did warn, this could be the most vulnerable side of the market, is we have like another ugly gap, okay? But just think about this price scenario. If we gap lower and the market gaps and just bids all day, that's trading. If the market gaps and flushes, we are literally talking about a Liberation Day type decline. And it's going to be just really ugly really quickly, and we're probably dropping to 6150. So, buckle up for next week, and we'll talk then. Okay. All right, good stuff. All right, Royal, thanks for being here. Thanks, Sean. Flusy here. Yep, took a win the day. That's always a good thing. Royal, good trades today. Raj, good trades today. Great trades today for Raj. And if anybody was in daily prop play, I'm hoping to grab some bucks. My levels this morning they were fine. It was obviously a test of these lows. The crazy part is this was a 6 or 7 delta when we got in today. So we still have a high probability profit. What's up, dude? All right, I'm gonna go. Enjoy the weekend, everybody. Happy Friday. We'll see you soon. All right, bye.